Financial documents are daunting at first with all the different terms, yet they're pivotal for making value investment decisions, as Howard Marks states. It's the first thing that I look at when I argue to whether trade a company's options and risk holding its shares for the long term. What you want is to eliminate any guesswork and understand what each line and nuance means, which is why I'm going to first share some context for what are the three different financial documents and why they are even published, focus on the income statement one in this video and break it down and clarify each line, what it means, down to the specifics using Apple's income statement from 2022, and go over an additional income statement from Tesla to show you how they all read the same. So just to give a quick background, when a company IPOs, it is obliged, among other things, to maintain a board of directors that will protect the shareholders' interest. Therefore, to avoid any conflict of interest, the members in the board of directors are usually executives from other companies. One member that is from the company is usually the CEO, which the board has the power to fire. For example, Apple's board of directors contains James Bell, which is the former CFO of Boeing, Sue Wagner, which is the co-founder and director at BlackRock, and even Al Gore, which we all know is the former vice president of the United States. Another obligation an IPOing company has is to disclose its financials to the public, since it's now offering them to trade its shares. This disclosure is achieved primarily by releasing three documents. First, the statement of income, which this video will break down, shows how much money the company made and spent to produce the goods and services that made that amount of money. In other words, it's a P&L statement, income and expenses. The second document is called the balance sheet, which is a snapshot of what the company owns, are called assets, and how or what has been paid to own those, which are called liabilities, like a loan from the bank, and equity, meaning an investment from a shareholder or profit reinvestment. Exactly that is represented by the formula. The balance sheet follows assets equals liabilities and equity. The third and last document is the statement of cash flows, which shows the company's cash inflow and outflow over a period of time. The income statement relates to sales that closed and apply to the company's books, while the statement of cash flows relates to the sales that closed and eventually resulted in cash coming into the company. And these two are different because not every closed deal will result in the company receiving cash, because sometimes the customers can cancel the deal after it has been made. So back to the income statement. Let's break down Apple's one line by line. This is Apple's income statement for Q3 of 2020. A public company needs to publish financial statements every quarter of its fiscal year. The title says Statement of Operations, which is just another term for the income statement. So first we have net sales. This represents the total revenue generated from the sale of goods and services during the period. For Apple, it's composed from products that it sells, such as the iPhone, that amounts to $46 billion, and services such as Apple Music that amounts to $13 billion. So for Q3, Apple's revenue was $59 billion in total. And what you see in other columns is the revenue Apple made for the same quarter for the previous year. And in these columns, you see the revenue Apple made over the trailing 9-month period from the current quarter and the same time period for the same quarter for the previous year. Cost of sales is the cost of producing the products and services sold during the period. For example, materials, labor, and rent expenses. This is also broken down to products, which cost Apple $32.6 billion to produce, and services, which cost Apple $4.4 billion to produce. This brings the total cost of sales to $37 billion. This leads to gross margin, which is the difference between net sales and cost of sales, representing the company's profit before deducting operating expenses. And for this statement, it stands at $22 billion. Operating expenses are the indirect costs of running the business. And in this case, it includes research and development, selling, general, and administrative expenses. In total, it costed Apple almost $9.6 billion for that quarter. This leads to operating income, which is the difference between gross margin and operating expenses, representing the company's profit from its core business operations, standing at $13 billion. In other income/expense, this includes income and expenses that are not related to the company's core business operations, such as income from sale of assets, gains from investments, and so on. This amounts to the relatively modest value of $46 million. Income before provision for income taxes is the company's total income before deducting taxes. This is the total profit the company made before paying taxes, amounting to $13 billion. Provision for income taxes is the amount of taxes owed by the company for the period, which is $1.8 billion, meaning that Apple paid 14% of their income as taxes, and when we deduct that amount from the income before provision for income taxes, we arrive at the net income, which is the company's profit after deducting all expenses, including taxes. Well then, what can a public company do with this profit? Two things that public companies usually do is first to pay dividends for its shareholders, and second to reinvest for growth. Now that we have a full view of the company's income and expenses, the last few sections show the income at different granularities and context. Earnings per share, EPS, measures the company's profit per share of its common stock outstanding. We have basic of $2.61 per share, where basic is for total number of shares outstanding, and diluted of $2.58 per share, which is for the total number of shares outstanding plus dilutive securities that are securities that can be converted to normal stocks, such as stock options and convertible bonds, which is why the diluted EPS is lower. Shares used in computing earnings per share represents the weighted average number of common shares outstanding during the period. In this case, 4.31 billion stocks for existing stocks and 4.35 billion stocks if we also converted all existing dilute securities to stocks. Net sales by reportable segment breaks down the company's net sales by geographic region. For example, the net sales from the Americas is $27 billion, and you can see that if we sum each geographical region on the globe, we get $59 billion, which is the total net sales above. So we can also learn that aliens don't want iPhones. Net sales by category breaks down the company's net sales by product category. The sum again is equal to total net sales, since those categories encompass all of the goods and services Apple sells. And we can also see that the sales from iPhone represent almost half of Apple's net sales. This completes the line-by-line breakdown of an income statement. While income statements are not going to be the same for different companies, they all follow the same pattern which you've seen. And for the small differences, you will be able to extrapolate. So to demonstrate that, here is an income statement of Tesla from 2022's Q4. It also has a section for income, just composed of different goods and services Tesla sells, such as cars, has an associated cost for these revenues, and we can see the gross margin and operations expenses, which would deduct from the gross margin to arrive at income from operations, and adding the other income and expenses coming from assets and interest and other non-business operation sources that sum to $22 million, we arrive at $2.6 billion, which is the income before paying taxes. We have a provision for taxes again, and deducting it from the income before taxes, we get the net income. One difference is the net income attributable to non-controlling interests, which means that this portion of income is attributable to minority stakeholders of Tesla's subsidiaries, which are companies that Tesla owns more than 50% of, but not 100%, such that there are other minority stakeholders that have the right for that portion of the profits, which is why we would have to deduct this amount to arrive at the net income that is attributable to the common stakeholders, the public. That's ultimately the income we as common shareholders will care more about when thinking of how much the company can reinvest or pay dividends. Finally, just like in Apple's income statement, we have earnings per share and the weighted average showing how many stocks are used in calculating the earnings per share. So this shows you that the income statements of different companies are similar for the most part, and for the smaller differences, you may be able to extrapolate. For me, reading and understanding an income statement serves as a sanity check before I go ahead and trade a company's options or stocks. And I hope you also find it helpful and integrate it within your due diligence process. One small piece of advice I will leave you with is that to find the income statement or any financial document of any company, you can just Google the company's name with investor relations. This wraps up the video. Thank you so much for watching, and I hope to see you in the next one. Cheers.